What's up YouTube, Dougie Chong here. Welcome to today's episode where I'll be reviewing HIVE Stock. Before I start this video, I'll say that I didn't sell all my regular stocks and go all in on crypto. I feel like I need this PSA just because a lot of people have been asking me about crypto and have a lot of interest in general, but they seem very disinterested in typical stocks like Amazon or TD. A portfolio should be diverse, and if you are investing in cryptocurrencies directly or buying mining stocks such as HIVE that I am about to review today, it is very risky. With that being said, please leave a like for this video and don't forget to subscribe if you have not already. Just hit that red button, it really helps my channel out. In this video, I will briefly go over the business model of cryptocurrency mining. Then I'll go over some of the advantages HIVE, the company, might have over other cryptocurrency mining companies. And last but not least, I'll say if HIVE stock is a buy in my opinion or not. So HIVE is a cryptocurrency mining company founded here in Vancouver, Canada. An interesting note is that the company was founded June 24th, 1987. Whereas Bitcoin was only formally introduced in the year 2009 after the great housing collapse. So the company must have pivoted from something else. So how exactly does a company make money from cryptocurrency mining? I won't go super in depth about it, but in this video, I'll explain enough to understand the basic business model. Basically, for Bitcoin specifically, you have to buy specialized hardware known as ASICs. These ASICs are made to do one thing and one thing only. Once they become obsolete, they are practically worthless, and they crank out newer and newer models with more efficiency about once a year. The ability to create these ASICs is very hard, requires a lot of capital and access to specialized equipment which is constantly in short supply. So naturally, the manufacturers of these ASICs have the most advantage when it comes to mining, but really anyone can buy these machines and make money if their electricity costs are low enough. In the news, HIVE recently purchased 6,400 of the newest Avalon miner from the company Canon for an increase of about 578 petahash of mining power. For those of you that do not know what hash rate is, it basically says how fast your machine is doing computations, and basically the more hash power you have, the more Bitcoin you will receive for mining. Each individual miner uses 3,420 watts of power and produces about 90 terahash of mining power. It's important to note that the amount of Bitcoin you receive for, let's say, 1 terahash of mining power is not always going to remain the same. It depends on how many other miners are out there, and you have to split the reward with all these other miners. Furthermore, there are protocols in the Bitcoin code known as halving events, which basically halve the amount of Bitcoin rewarded to miners. Plugging the numbers in to the website What to Mine, we find that these new miners should be able to make about $73,000 of profit every single day and only use about $53,000 in electricity, assuming a 10 cent per kilowatt hour electricity cost. I actually looked it up, and one of their plants in Sweden pays a ridiculously low 1.6 cents per kilowatt hour for electricity. So these miners are actually making maybe close to 100K or a little more than 100K each and every single day. I personally have tried to make my own farm before, but I cannot compete with such low electricity rates. Here in Canada, the cheapest I could find was around 5 cents per kilowatt hour in Quebec, and even then you need special connections or need to consume huge amounts of energy in order for them to consider you. Mining now during a cryptocurrency bull run is profitable now for pretty much everybody regardless of electricity price, but when the price starts to go down or even stagnate a little, only the most efficient miners will survive. That's a very important thing to consider. While there are profits to be made, more and more people will pour into this mining space until the margins are razor thin. And all these calculations are just for their new miners that are coming in shortly. Their total hash power is about double this, so the revenue is maybe 150 to 200K a year, or that's their projected revenue for late 2021. I believe all these new miners are scheduled to be shipped out in batches of about 500 machines starting out in April and then every month for the rest of 2021. Now, how easy is it to set up these ASIC miners exactly? And unlike graphics card mining rigs, ASICs are very easy to set up. You pretty much just plug in Ethernet, plug in power, and you're good to go. You pretty much enter your Bitcoin address into a config file, and that's it. You're mining Bitcoin. But when it comes to adding about 500 units, you have to worry about things like space requirements, heating requirements, power costs, and even security for all these miners. Alright, now let's look at some of the numbers. It recently shot up quite a bit, and any normal stock I would never consider a buy. Taking a look at just the 1 year chart, it was a mere 13 cents back in January 2020. Now it has almost 30 times, or increased by 3,000% to $2.58. Of course, the price increase is largely correlated with the increase in Bitcoin price, but even Bitcoin did not increase 30 times. I believe this is mostly because the company was undervalued when Bitcoin dropped, and in many ways, mining companies get hit harder than the actual asset itself. But if the asset goes up a lot, mining companies have the most to gain. So is HIVE Stock a buy in my opinion? Again, this is just my opinion. I'm not a legal financial advisor. I was very intrigued by this stock. Since I am very bullish on cryptocurrency, it makes sense that I would buy a cryptocurrency mining stock, right? Well, I showed how the business model works in the rosy times like now, but let's say Bitcoin takes another big dip, drops something like 90%, which it has done in the past. Even though the company will probably still be profitable due to its extremely low electricity rate, competition will have likely increased by then, eating into their profits even more. As such, its P/E ratio of close to 50 will be hard to justify because there is no more growth left to be had. It's not like a company like Amazon, which is still expanding into many different spaces. One could argue that they could simply grow by building more of these mining farms, but competition for these cheap electricity spots will be extremely fierce. So in my opinion, maybe it's okay to pick up a few shares if you have no other exposure into crypto, but I think to buy a stock like this or crypto in general, it's best to buy during a crash. Some people think that pullback is happening right now with Bitcoin dropping from about $41,000 to about $32,000 here today, but I think that's more of a healthy correction. So that's what I'll be waiting for, that next drop, but this stock certainly is interesting, and the fact that it trades on the TSX is just a nice bonus. That's it for this video, guys. Thanks a lot for watching. Hope you learned a lot about HIVE Stock. Let me know what you guys think about HIVE Stock in the comments below. As always, leave a like if this video helped you at all. Don't forget to subscribe if you have not already. Enjoy the rest of your day and see you in the next video.